But today, a reversal. We're higher across the board. Volatility certainly has picked up in the last month. And your next guest says data on you, the retail investor, suggests no big rush for protection or hedging. Gunjan Banerji is the lead writer for Markets Live at the Wall Street Journal, CNBC contributor. Does this mean people aren't nervous? Hello, by the way.
Hello, Brian. It does not look like people are very nervous. In fact, a lot of them are buying the dip, as we can see with the big rebound today. And it's been a record year for this very popular buy the dip trade. S&P 500 has rebounded around 2% after one-day drops of that much this year. That makes it the best year for the buy the dip trade since 2019 and the second best year since the 1980s.
Those are incredible stats. I mean, going back to my time, the 1980s. And we saw it in DeepSeek Day in January. We saw it again with tariff liberation. That took a couple days, but the markets came roaring back. We saw it again from Friday, i.e. today. Who are these people? Do we know why they're buying?
Well, I think they've seen that this trade has worked. You know, as you mentioned, we have not seen that much volatility this year, but every time people have plowed money into the markets. And what's really remarkable is that I do think that this recent leg of the rally has been driven by Americans of many different income levels and of many different ages. As the Journal recently reported, 25-year-olds, around a third of them are in the markets today. In 2015, that figure was 6%.
Was this the story I read, and everything kind of gets mushed together on the weekends when I read my Apple News Plus? I was referenced the previous segment, about how people aren't buying homes in part because they're buying so much in stocks.
They're putting
their money into the stock market, not the housing market.
And it's worked. Take a look at share prices, right, compared to home prices. And I think that's why Americans of all income levels are also putting money into the markets. Income levels between $30,000 and $80,000 a year. More of those Americans are in the market than ever before, and many of them have entered during this bull market.
That is the true retail investor. We want market participation. We want everybody to feel that they can access this market. Yes. You don't need to be a multimillionaire.
And they feel that way.
And there's always a but. When I see leveraged crypto trades, when I see 3x ETFs up or down, I'm not setting up a warning flag, but at the same time, these are instruments where if they work, they're going to work really well. If they don't work, there is a lot more risk here, right? Talk to us about leveraged crypto.
I mean, I think it's leverage across the board. Yes. I was shocked to see that leveraged ETFs tied to the NASDAQ, NVIDIA, saw some of their biggest inflows on record last week during this volatility. And stock investors who enter the markets on Friday are probably taking a look at their accounts, and they're pretty happy right now. Crypto leveraged traders are still nursing losses.
So to be clear, and if I'm wrong, please tell me, the leverage here is basically, it's not one-to-one. You buy a share of NVIDIA, it goes up, you make some money, goes down, you lose a little bit of money when you sell. These are X multiples, right?
Exactly. This is 10x.
Or borrowed money, 10x.
10x, 20x, 100x leverage. And these trades are coming to the U.S.
There's not 100x leverage.
Well, that's abroad. That's on offshore exchanges. But
it does exist. But that exists?
It exists.
100 times leverage offshore stuff. Yes. Crypto trades exist.
And I would bet that U.S. exchanges and brokerages will keep amping up the leverage. On Coinbase, you can access 10x leverage on Bitcoin and Ethereum. That was for the first time over the summer, and I think they're going to keep pushing the envelope.
If these crypto assets continue to go up, those people are going to make a lot of money.
Right, but take a look at what happened on Friday, right? People in these trades can also lose a lot of money, lose everything on days like Friday. I called it the get rich or get wiped out trade.
Yeah, do we know how much of that leverage may contribute to sort of the more volatile declines that we see, right? So the stock market won't go down, 0.25%. It'll go down 3%.
Yep.
And then it comes back roaring right back. Those extreme movements, or at least my perception sitting here of extreme movements, has to be tied, if it's real, to those leveraged trades or no.
Look, what I often hear from traders, especially the past few years, as we've seen the rise of options trades, one-day options trades, leveraged ETFs, right? A lot of these trades rebalance around the close. So a lot of traders do think that that can exacerbate volatility on big up days and big down days.
Is this, you said offshore, I would imagine that there's not just U.S. retail investors buying in. I've heard a lot about investors in other places like South Korea. This is a global market, correct?
This is a global phenomenon, and you will be shocked at how much activity is taking place in these so-called perpetual futures, around 68% of Bitcoin volumes.
What's a perpetual future?
So these are the leverage trades. These are the crypto leverage trades that offer 10x, 20x.
And those markets don't close. Is that why I'm assuming that just based on the name perpetual?
They're around the clock, and these are contracts that don't expire.